Hello guys, so today we are going to study chapter number 1, that is nature, objective and scope of audit. So in this chapter we have 10 topics. This is basically introduction to the audit. So in this chapter we are going to study 3 essays. Essay 200, that is overall objective of independent auditor and conduct of audit with essay
in accordance with essay.
essay 210, agreeing the terms of audit engagement, and essay 220, quality control for audit of financial statement. Okay, and we are going to rate the questions as per ABC analysis. A is for important question, B is for true or false question, C is for less important question, and D is for uh, general knowledge question which might come for MCQs. So let's move ahead. So what is audit? Audit are of many types like tax audit, internal audit, statutory audit. So we are going to study statutory audit. Statutory audit is also known as financial statement audit or external audit. Okay, statutory audit is also known as financial statement audit or external audit. So it is, what is audit? Audit is independent examination of financial information for any entity, whether profit oriented or not, irrespective of its size and legal structure, with a view to express an opinion. Okay, so important keyword is audit is independent examination. Independent means you should be unbiased. We should not say that he is my relative, he is my friend, so I'll be on his side. No, we should be independent irrespective of who is he. We should be independent. We should do independent examination. Examination means like checking, like how teacher check a paper. Similar, examination means checking, but instead of paper we are going to examine financial information of company. Okay, so audit is independent examination of financial information of any entity, whether it is profit oriented or not, or irrespective of its size and legal structure. So for any size of company, for let legal structure be anything, whether it be company or private limited company or partnership, or audit can be done of any type of entity, whether it is profit oriented or whether it is NGO. We can do audit of any type of entity. So first keyword is independent examination, second keyword is financial information, third keyword is any entity. So it is independent examination of financial information of any entity with a view to express an opinion. So after checking the papers, teacher gave marks, we will give opinion. Well, there are different type of opinion like qualified, adverse, disclaimer, etc. So instead of marks we give opinion. Okay, so what is audit? Audit is independent examination. Independent examination of what? Independent examination of financial information. Financial information for, not for student, it is for any entity, whether profit oriented or not, irrespective of size and legal structure, with a view to express an opinion. Okay, similar to checking the papers, we examine in teacher independently do examination of our papers. Instead of papers, here is financial information. Financial information papers is of for students, financial information is of entity. Teacher give marks, we will give opinion. Okay, so let's move ahead. There is one good video from KPMG which explains you what is audit. So let's see that.
When most people think of an audit, they imagine IRS agents arriving unannounced, calculators in hand, ready to go through boxes of invoices, receipts, and notes.
That's certainly one type of an audit, but it's not the only kind.
Most of the audits that Big Four firms do have nothing to do with tax day.
And none of them are unannounced. Publicly traded companies are required by the Securities and Exchange Commission to validate their financial positions with an audit. And although they're not legally required to, privately held companies often perform audits at the request of banks, investors, and other key stakeholders.
Their goal? To assure investors and other stakeholders that their cash flows, balance sheets, and profit and loss statements aren't materially misstated.
Firms like KPMG are often hired to perform these audits because they can provide an independent review of how a company operates.
And whether public or private, companies that go through an audit have the opportunity to gain valuable insight into how their business is performing.
So that's why companies perform audits. But what is an audit engagement like?
The word audit means to evaluate. So you could say auditors are the ones who evaluate where money's coming from, where it's going, and what it's doing each step of the way.
Accounts receivables, vendors' fees, acquisitions, operating expenses, there are a lot of channels that money can flow through. And the bigger the organization, the more accounts there are to follow.
Which is why a career in audit can be so dynamic, especially in this global economy. Now, take a typical audit team, say for a multi-billion-dollar company. Now, to serve a client like this, there may be multiple partners working in multiple locations around the world. There may be managers, senior associates, and associates working in multiple time zones. There may even be specialists from tax or advisory practice offering their expertise on everything from tax compliance to IT controls testing.
Senior members provide leadership and direction, but there's a fair amount of autonomy, so each team member should be capable of self-management.
Of course, communication skills are essential. To really excel at being an auditor, you need to be able to think critically, to understand what business decisions drive the transactions you're auditing.
Why does this transaction benefit the company?
And how does it fit in the company's strategy? Auditors who understand motivations for each transaction bring the right level of professional skepticism to the project, which is important because it's our job to look at the financial statements and see what companies say and verify that it's correct.
Or not.
An audit engagement can take anywhere from a few months to a full year, depending on the size of the client and the complexity of the project.
Unlike advisory, where most of our clients are engaged on a project-by-project basis, most of our audit clients are annuity clients, meaning we work with them year after year.
In fact, we spend so much time at our client sites that some of us even set up permanent workstations at their offices.
While we're there, we spend a lot of time poring over their documents and drinking their coffee.
We compare the documents the company uses in their day-to-day operations against what they've recorded in their financial statements.
For example, we might take the receivables a company plans to report and compare them with actual orders that customers have placed.
We may also contact vendors to ensure that the numbers listed in the purchase orders are accurate. Hi. Yeah, can we go ahead and send confirms to the vendor?
We then take that information and compare it with the information companies are required to report in their SEC filing. And then we state our opinion as to the accuracy of those statements in our audit report.
I'm not gonna lie, audit can be hectic.
We're working in a real business environment, which is always changing.
A major contract could be revoked
Or won.
by our client, meaning now there's a new transaction to audit.
Or our client could purchase another company, requiring us to do an audit of that company and its assets. Or a subsidiary could go bankrupt, requiring us to evaluate its vitality to the parent company.
Now, changes like this, they can occur at any time and have a profound impact on work that we've already done.
But that's the real world, and it's one of the great advantages of working in audit.
No other practice gives such an intimate view of how business works.
As an auditor, you see why companies make the decisions they make and the financial impact that has across the organization. You also see what companies gain from the services an accounting firm offers. After all, An audit's not done just to meet investor or SEC requirements. Many companies use their audit findings as a basis to make strategic plans for their future. As such, an auditor provides one of the most important business functions. They verify whether the results a company is reporting are correct, while ensuring the obligations they've made to stakeholders are being honored. And that's kind of a big deal.
So you got a general idea about what is audit. Now let's understand this in detail. Okay? So let's understand types of audit. There are two type of audit. Audit required under law and another one is voluntary audit. Okay? So, in audit required under law, law made it compulsory for the companies to perform audit. For example, Company Act make compulsory for company under Company Act to perform audit. Similar is for banking company and registered society. So, your law made it compulsory for some companies, some type of companies to perform statutory audit. Okay, so this is audit required under law. Next is voluntary audit. In voluntary audit, there is no basic legal requirement for the company to perform audit. Okay, so there is no legal requirement to perform audit. It is total freedom for private limited company. If you want to perform audit, perform. If you don't perform. Okay, then why do they perform audit? They perform audit to gain advantages of audit of financial statement. Okay, so they perform audit to gain advantages of audit of financial statement. There are many advantages, so we will study 8 advantages of audit of financial statement. So let's see what are the advantages of audit. First is it help in getting sanctions. So government company gives sanctions tenders to person who performs audit. Okay, so it is helpful to getting sanctions. It is helpful in negotiating for the loans, determining purchase consideration. Bank will see your financial statement, is it audited. If it is audited, it will be easy to you to get loan. Okay, so it helps in getting sanctions, it helps in negotiating for loan, determining purchase consideration. It also safeguards the interest of the person not associated with the management. Person not associated with the management means shareholders and bankers, etc. So shareholders and bankers give their money to the management, and management performs the business, and they perform on, and what all transaction they have did, it is listed in our balance sheet and P&L. But we can't trust them so easily, so we apply an auditor. An auditor then audits all the transaction and say whether the transaction are true or fair. So it safeguards the interest of person not associated with the management, for example shareholder and bankers. It also act as a moral check of the employees. Like if it checks whether any employee is not giving contracts only to his relative, such things. It checks whether employees performing properly or not. Next, it helps in settling tax liabilities. Next, it also help in detection of wastages and losses, identify weakness and inadequacy, settling accounts at the time of admission and death. So these are some of the advantages of audit. To There's one tip to learn this easily. So we will take one story to learn this 8 points. First, we will start a business. In our business, government will give us sanction, so we can start our business. Then to perform that business, we will need some capital. We will get that capital in the form of loan and equity. So we once we start a business, we we'll apply our capital, and then we'll start performing business. While performing business, we will check whether employees are not doing any kind of fraud. So we'll keep a moral check of employees. Then after performing business, we will earn profit, and if we earn profit, we need to pay a tax liability. So we will settle tax liabilities, and then further also we need to do a good business. So we will detect wastages and losses in our business. We will identify weakness and inadvocacy, and so this is how a business will flow from time to time. But at the end, a partner can die. So at the time of death, we will settle accounts at the time of death or admission of the partner. Okay, so with this story, we can easily learn this 8 points, that is advantages of audit of financial statement. This could be a good question for your exam. So let's let us read together what are the advantages of financial statement. Okay, let's go. Number one, it helps in getting sanctions. Number two, it helps in negotiating loan and determining purchase consideration. It safeguards the interest of person not associated with the management. It acts as a moral check of the employees. It helps in settling tax liabilities, help in detection of wastages and losses, identify weakness and inadequacy, settling account at the time of admission and date. So easy. So we have learned one question, that is advantages of audit of financial statement. Before that, we will also learn one more question, that are type of audit. Let's revise one time. We will both say it together. So what are the explain two types of audit. Two types of audit are audit required under law and voluntary audit. In audit required under law make it compulsory to perform audit for some companies. For example, companies under Companies Act, banking company, registered society, etc., need to compulsorily perform statutory audit under law. Whereas in voluntary audit, there is no basic legal requirement for company to perform audit, but company perform audit in order to get advantages of audit of financial statement. So we have learned these two answers. Third one we have learned, that is define audit. Define audit. What is audit? Audit, it is an independent examination of financial information of any entity, whether profit oriented or not, irrespective of size and legal structure. Easy. So simply we have learned three answers: what define audit, types of audit, and advantages of audit. Okay, now let's understand the overall objective of an independent auditor. Okay, so overall objective of independent auditor is given in essay 200. Essay 200 is overall objective of independent auditor and conduct of audit in accordance with essay. So we can divide essay 200 in two parts. One is overall objective of an independent auditor, and second is conduct of audit in accordance with essay. So this is the title of our essay 200. Okay, let's understand the overall objective of independent auditor. Overall objective of independent auditor is to obtain reasonable assurance whether financial statement are free from material misstatement. So this is our work, to gain reasonable assurance whether financial statement or material misstatement and financial statement are prepared as per applicable FRF. So we need to get a reasonable assurance whether financial statement are free from material misstatement or not, and second, whether financial statement are prepared as per applicable FRF. So we need to check these two things: is financial statement are free from material misstatement, is financial statement are prepared as per applicable FRF. Next, we need to report on financial statement, that is our audit report, and then communicate as per essay in AGM. Okay, So this is the objective of audit auditor. Okay, let us read together. So overall objective of independent auditor, as per essay 210, overall objective of independent auditor is to conduct overall objective of independent auditor and conduct of audit in accordance with essay. Overall objective of independent auditor is to obtain reasonable assurance whether financial statement are free from material misstatement and a financial statement are prepared as per applicable FRF before expressing an opinion, to report on financial statement and communicate as per essay. So this 4 points, this is our overall objective of an independent auditor. Let's move ahead to some of the keywords. By this time we have learned 4 answers. Okay, now let's understand some keywords. Most important word is material misstatement. We heard about this word here only. Financial statement should be free from material misstatement. So what is material misstatement? So material means such a quantity in auditor's judgment that can influence the decision of the user. Okay, so for example, in case of Reliance Industry, amount such as 1 lakh will be irrelevant. 1 lakh is irrelevant for them. It won't influence the decision of a user. If in P&L, if there is 1 lakh they show 1 lakh less profit in front of 1,000 crores. What is 1 lakh? It is nothing for them. So this is this is how auditors check whether it will influence the decision of the user or not. So material is such a quantity in auditor's judgment that can influence the decision of the user. Okay, let's see what is misstatement. Misstatement is difference between amount reported in financial statement and amount which should have been reported in accordance with FRF. So it is difference between amount reported and amount which should have been reported as per FRF. Okay, so it is difference between reported and what should have been reported. Okay, so what is misstatement? Misstatement is difference between amount classification, presentation and disclosure of reported financial statement and amount classification, presentation, disclosure that is required in accordance with FRF. Okay, so what is material misstatement? Let's say it together. Material is such a quantity in auditor's judgment that can influence the decision of the user, and misstatement is amount classification, presentation and disclosure of reported financial statement and amount classification, presentation, disclosure that is required in accordance with applicable FRF. It is difference between reported and that is what is required under applicable FRF. Okay, now let's move ahead. So we understood what is material misstatement. Now let's understand what is reasonable assurance. Our objective was to obtain reasonable assurance whether financial statement are free from material misstatement. We understood what is material misstatement. Now let's understand what is reasonable assurance. Okay, so reasonable assurance is also defined under essay 200. Essay 200 defines reasonable assurance as such assurance which is high but not absolute level of assurance. So reasonable assurance is high but not absolute level of assurance. Okay, absolute assurance implies 100% assurance. Like we say that this financial statement is 100% true and correct. But in reasonable assurance we say no, the financial statement is true and fair. It has high, we have high level of assurance, not 100%. We can't guarantee 100%. Okay. So first in if question comes about absolute and reasonable assurance, first you need to define what is reasonable assurance. Reasonable assurance is high level assurance but not absolute assurance, and absolute assurance implies 100% assurance. Therefore we give true and fair view. True and fair implies reasonable assurance, which is high level of assurance, and not true and correct view. True and correct implies absolute assurance, that is 100% assurance. Okay. First you need to define reasonable assurance and absolute assurance. Then second, you need to explain what is true and fair and true and correct in for absolute and reasonable assurance. Okay. So auditor is required to obtain reasonable assurance whether financial statements are free from material misstatement. Thus auditor obtain sufficient and appropriate audit evidence to reduce audit risk to acceptable low level. However, reasonable assurance is not an absolute assurance. This is due to inherent limitation of audit. Due to inherent limitation of audit, we we cannot get absolute assurance, so we give reasonable assurance. To get reasonable assurance, we obtain sufficient and appropriate audit evidence, and by it we reduce the audit risk to acceptable low level. Okay. So auditor obtain reasonable assurance whether financial statement are free from material misstatement or not. Here now, what we understood what is reasonable assurance, we understood what is material misstatement. Now let's see what is sufficient and appropriate audit evidence. Okay. Sufficient implies quantity of the evidence. What, how much quantity of evidence, how much invoices we have checked. So sufficient means quantity, and appropriate means quality of the evidence, how strong evidence we have. Okay. So we should have plus sufficient plus appropriate audit evidence, good quantity plus good quality. Okay. But what is audit evidence? So audit evidence is any information used by auditor in arriving at conclusion on which auditor's opinion is based. So it is any information gained from employees, gained from books of accounts, any information used by auditor for arriving at the conclusion on which his opinion is based on. Okay. So audit evidence is information used by auditor in arriving at the conclusion on which his opinion is based on. It includes both accounting records underlying financial statement, which is books of accounts, and next is other information like information gained from employees. Okay. So audit evidence is information used by auditor in arriving at the conclusion on which auditor's opinion is based on. Okay. So we need sufficient and appropriate audit evidence to reduce audit risk to acceptable low level. Okay. Easy. So let's see what all we have learned till now. We have learned four keywords: material misstatement, absolute and reasonable assurance, sufficient and appropriate, and audit evidence. Okay. And let's have one final quick revision. We have also learned four answer: define audit, types of audit, advantages of audit, overall objective of independent auditor, and then four keywords and their meaning. Let's have one final quick revision. We both will say it together. Okay, let's start it. Define audit. Audit, it is independent examination of financial information for any entity, whether profit oriented or not, irrespective of its size and legal structure, with a view to express an opinion. Ta-dam. Next question is define types of audit. Type of audit, there are two type of audit: audit required under law and voluntary audit. Under audit required under law, law make it compulsory for some type of company to perform audit. For example, companies under Companies Act, banking companies, registered society, etc. In voluntary audit, there is no basic legal requirement for company to perform audit, but company perform audit to gain advantages of audit of financial statement. Easy. Tadam, two questions done. Next one is what is advantages of audit of financial statement. Audit of financial statement help in getting sanctions. It help in negotiating for loans and determining purchase consideration. It safeguards the interest of the person not associated with the management. It act as a moral check of the employees. It help in settling tax liabilities. It help in detection of wastages and losses, identifying weakness and inadvocacy, settling account at the time of death and admission. Easy. Three answers done. Done. Next question is what are the overall objective of independent auditor? So as per essay 210, overall objective of independent auditor and conduct of audit in accordance with essay, overall objective of independent auditor is to obtain reasonable assurance whether financial statement are free from material misstatement and financial statement are prepared as per applicable FRF, to report on financial statement and communicate as per essay. Okay, four answers done. Now four four small questions, that is keywords. First keyword, material misstatement. So material misstatement. Material is such a quantity in auditor's judgment that can influence the decision of the user. And misstatement is difference between amount classification, presentation, disclosure of a reported financial statement and amount classification, presentation, disclosure that is required that is required in accordance with applicable FRF. Time. Next is what is absolute and reasonable assurance. So SE 200 defines reasonable assurance. Reasonable assurance is high assurance but not absolute assurance, and absolute assurance implies 100% assurance. So we give true and fair view. True and fair implies reasonable assurance, which is high level of assurance, and true and correct implies absolute assurance, that is 100% assurance. Auditor is required to obtain reasonable assurance whether financial statement are free from material misstatement, whether auditor obtains sufficient and appropriate audit evidence to reduce audit risk to acceptable low level. However, reasonable assurance is not absolute assurance. This is due to inherent limitation of audit. Next is sufficient and appropriate. Sufficient is for quantity and appropriate is for quality. Audit evidence. Audit evidence is information used by an auditor in arriving at conclusion on which auditor's opinion is based on. It includes both accounting records and other information. We need sufficient and appropriate audit evidence to reduce audit risk to acceptable low level. Okay, so we have done with 4 keywords and 4 question answers.